Peter says, he feels like I might be bearish, but my leading question here was whether or not governments are injecting liquidity into the market. Because if they are, then it goes back to a theme that Tom and I have talked about more than once on this show, which is how quick recoveries are taking these days. If you go back to COVID, no one anticipated that V-shaped recovery. It was one of the fastest stock market recoveries I think we've seen in a very long time. And we didn't see as big of a drawdown in the event than we've seen in former years. The GFC was like one of the longer periods of drawdown. It's sort of an expected period of drawdown that took a long time to recover from. But COVID, that was like one of the best reversal trades you could ever be part of. It was a fantastic drawdown, a really good spot to buy undervalued companies, a really good spot to buy long calls. And if you had taken that trade, you would have seen significant upside in 2020 through 2022. This is another one of those drawdowns where I'm constantly curious. Are governments injecting liquidity into the markets, especially now that the Fed has unwound its position pretty significantly? Are we seeing this opportunity again for another buy the dip opportunity, right? Like that's I think what is on everybody's minds. The whole BTD concept now is like rampant. Everybody's fairly familiar with the concept. If market participants are gaining confidence that we are very quickly recovering from a drawdown in equities, then it's a great buying opportunity. And I want to be looking for which stocks I want to get long on. I already sold into cash. So I'm sitting here waiting just like the rest of the market, trying to figure out where I want to allocate cash now. And these questions are aimed at just determining whether I should be more bullish than I already am, Peter.
Well, that's the part I find to be fascinating is that I don't think we're going to have a thing like happened in COVID, because that was liquidity injected by every nation all at the same time, no brakes on the thing. I mean, none. And we hadn't seen inflation since the 70s. So they can't do that now. There's not going to be, programs where you can go and get funding for different employees and get $10,000 per head, and there's not going to be any of that stuff happening going on.
Got it.
What I think will happen though is that they're gonna have to inject liquidity and then pull it, and inject liquidity and pull it. They're gonna have to stop and go and stop and go and stop and go, which means I think we'll have this zigzag within the markets where we have all-time highs, super low, all-time highs, super low, all-time highs, super low, and that's the part that to me is the most exciting because one on the TradFi side, stocks, bonds, forex, and all that stuff, people are not going to know what to do, and you're going to have to express your trade or you're going to be pushed to express your trade in options in order to, one, have access to non-recourse leverage, and two, cap your downside. And on the other side, for the crypto space, they're already used to this. They're already used to up 300%, down 80%, up. They're already used to this sort of thing.
It's true.
And so which is the next video I want to show you here from actually no, I'm not going to play that one. It's Taleb was talking about on CNBC how, look, Bitcoin wasn't a hedge against uncertainty,
right?
And in my head I'm sort of thinking, I mean, I love Taleb, but I think this okay boomer sort of idea of talk about an asset that has taught an entire generation about massive volatility.
Yeah, we've gotten so comfortable with it now. I think people are definitely more comfortable with volatility than ever before. Yeah,
that's right. Yeah. And so, and there are massive opportunities in that space. There's no getting around that. And so, when the TradFi space starts behaving like this, then we have to move into the options, and then essentially we're getting the same sort of profile for in crypto in the option space in the TradFi market. So that's what I'm interested in, and I think it completely changes the type of strategies that we'll see at TradersPost, because I think the options will really explode, crypto will really explode, and the way that people go about it won't be this it'll be trend following in volatility, or not mean version, but reversals in volatility. It'll become more of the asset that people are trading volatility as opposed to the price. I think the price will start acting like an RSI indicator. Like it won't even be the thing that you're actually trading. You're trading the underlying volatility of the asset.
Great. Let's get closer to trading price action then. That's what I'm all about anyway. So